All right, welcome back. 5-minute traders. First full trading week of July is here, and wanted to just take a look at the beans. Beans have been with the rest of the grains since the USDA report a little over a week ago now. Have been full moonshot, rocket ship. So all the news is out there. Planting, and there's less planting than there ever has been, and I guess the market is interpreting this as we need to buy. But it's really all it is they're getting every short that has been in the position really for all of 2017, the high, we opened really at the high of the year on the beans, and that was 1079 here. So we're not quite there. We're only on the continuous contract, we're only about 60 cents away, so another 6%. But in 9 days, we went from the year low, which was 905, all the way up here to 1024. And we're actually looking at the front month for us would be the X month. Although this is the Q on the continuous, I would look to the November contract, which is trading around 1039, and say to you that you're probably getting a little bit extended over the next day or two. You should see a pullback. So if you want a pretty aggressive trade, I would sell some beans, the X contract at 10. You can see it's trading right here at 1039. So you can hit those right now. And one contract, if it goes up to the high, $40, you're looking at a $2,000 risk per contract. So I would sell every 5 or 10, depending on your appetite. Any higher that we get in the next couple of days, that is. So take a look at that, and I would look for a pullback at least to the low end down in here. We had a runaway gap from Sunday. We had a runaway gap here, all kinds of runaway gaps. That doesn't mean they're going to be filled anytime soon, but just to let you know, there's a lot of holes, and basically what this is anybody that was short for the year just is getting squeezed the last couple days. And so if you were shorting the hole down in here, these are the buyers that are filling up in here, and you can see we just gapped here and gapped to this hole. So these holes that were left now become easy targets. We may have one more tomorrow if they gap them up again here, and that would take you up to about 1035, which is $10 higher. So it's closing strongly here today as we close here on Monday. Just pointing out that 1039 here on the November contract would be the one that I would look at. And again, I would sell outrights here. I wouldn't necessarily consider puts yet until we get higher towards that $11 per bushel area. Otherwise, if that is too aggressive for you, then you might want to wait for higher prices to possibly buy some puts. But I think this is really much ado about nothing. It's continuation from wheat, really pulled the whole grain sector up, wheat and corn. They were oversold, and they needed to squeeze them, and they've done it in less than a week. They've taken out all the shorts in all those products. If you look at wheat, they did the same thing. We're at year highs. We made new highs, and but have just been kind of hanging around since we rallied all the way up there to 580. So that's it. We'll be back. Keep an eye on it. 5-minute trader. If you have any questions, drop us an email, and we'll look forward to hearing from you. Any questions you have. Also I wanted to point out today that Amazon is back to 1,000, and I would put that trade back on. We took it off at 960 for about 4%. That happened almost in 2 days after we put it on. So I'm going to put it back on here. It's trading 998 as we speak. So I'm going to buy some more puts, and we'll see how that works out. So buy some defined puts next month or two, and you can buy one contract up to as many as you can consume. And I'd say that Amazon is giving a second chance here as it comes back and tests the $1,000 area.